Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video, I want to talk about how you can reduce your mortgage payments. I've just done this on one of my properties and I know that this video will help a lot of people because look, the cost of living crisis at the moment is tough. Energy prices are still going up. We've got another rise, unfortunately, in around April, I believe it is. And interest rates are going up as well. So if you can reduce your payments each and every month, that's important. Now, this will work if you're a homeowner and potentially will work if you're a buy-to-let landlord as well. So do make sure that you stick around. Give this video a quick like, guys. That really helps me with YouTube. And do subscribe to the channel and hit the bell notification. Now, right now, we want to make sure that we keep our costs down. Of course we do, right? Because energy is at an all-time high. Mortgage rates, as I said, are going up, and that's really worrying for a lot of people. Now, there are ways that you can reduce your mortgage payment. So if you're on a residential mortgage at the moment, one thing that you can do is change to interest only temporarily. Now, that might have a huge impact on your monthly payments. So if you call your mortgage provider and they are able to change your details across to interest only. So if you're, for example, paying £500 a month, if you went to interest only, your payments might go down to half. Now, what's the consequences of that? Well, financially, as in credit ratings and stuff like that, nothing. That doesn't impact that at all. However, what it does mean is that you're not paying off your balance. You're just going to be paying off the interest. And that's fine because right now, inflation is paying off that balance anyway. So say you owe, for example, 100 grand. You've got 100 grand in debt left on your mortgage and you're paying £500 a month. Then roughly 250 quid out of that 500 is paying off that debt that you owe. And so what I would be happy to do in that instance is just turn onto interest only, maybe for a couple of years, just to get yourself back into a good position financially. And by then, this energy crisis and inflation will be way behind us at that stage. And that could be a good thing for you. Now, I know a lot of people worry because they want to pay their mortgage down, but 100 grand is a lot of money, but in 20 years from now, it won't be. And it'll just mean that you'll finish your mortgage, however long you changed onto interest only, a couple of years later. Now, what you could also do is just save that extra money in your savings. And if you don't need it, for example, then you could, at that stage, just use that payment that you saved and just pay down the debt. So you'd be in the same scenario in that place. But what it does is it gives you some breathing room today. That's one way to do this, right? So that's one way that you can do this right here. Now, I have most of my properties on buy-to-lets on interest only, but I do have an older one that is on repayment. And at the time we put it on repayment just because I had the belief that I wanted to pay that mortgage down. Now, I want to pay that mortgage down because I like to have in my portfolio of properties around about 50% to 60% debt. You can go as high as 75%, but I like to have that little buffer in there because I've got a fairly decent sized portfolio and I want to make sure that I've got that little buffer in case anything happens. So what you can do is if you're on a repayment mortgage, that mortgage might be 25 years, for example. I have a repayment mortgage right now, and it's at a stage where it's got around 5 years left on that mortgage. And so what I did was I was paying £500 a month on there. And what I've done is I've just extended that mortgage back up to 25 years. And so by extending it back up to 25 years, it's turned that monthly payment to £92. So that gives me more cash flow on that property, and I've got the right to let that property. The lender is aware that I'm running it as a buy-to-let mortgage. That's very important if you're doing it as buy-to-let. But if you're not, it doesn't matter. What my point is in this video is there are ways that you can reduce your monthly payments either long-term or temporarily. And so if I've done this, I'm now £400 per month better off. Just about pays the gas bill in this day and age, doesn't it? But that's a good thing, right? And so that is important, that you increase your cash flow where you can. Now, another thing that you can do, the last one, is just to refinance. So remortgage. There are tons of people that I would have thought that they knew this, but not everybody does, right? There are tons of people out there that are just not on the best rates that they could be. Maybe they're on a variable rate right now, just hoping that the rates are going to come down. Well, you're going to have at least 2 more interest rate rises in 2023. That's already been said very clearly by the Bank of England. So what it might be better to do is go on a fixed deal for a short period of time, maybe a year or 2 years, just so you get that certainty on what your payments are. That might bring your payments down significantly for you. Might not be as much as extending the loan period by 20 odd years, but it might make yourself better off by like 100 quid or 200 quid, depending on the size of your mortgage. So with all of these things, you need to speak to a proper qualified mortgage broker. That's not me. I'm just sharing with you some ways that I have recently saved myself some money, and I'm hoping that some of you will use this, and then you can go out there and get your cash flow improved or get some savings in the bank. It will just make your life that little bit easier. So number one is to change your mortgage to interest only. I would do that on a temporary basis. If you're a residential owner, the chances are you probably do want to pay your mortgage off at some point. A lot of people like to do that, not me, but a lot of people do. Or look at extending the period of the loan. If you're on a repayment mortgage, going back up to 25 years, if you have the luxury of being at an age that you can do that still. It has to be that you need to be able to pay the mortgage off by retirement, but maybe you've got 10 years left on your mortgage and you could extend it to 15 years, and that could reduce the payments for you as well. All of these things combined are going to get you an opportunity to save money. And right now in this market, that's what we want to do, is we want to save money, because gas, electric, all of these things are still going up in price. Yeah, we've had a little dip in inflation, but it's going to take 6 months, a year, until we start seeing fully the back of inflation and we stop talking about that and we focus on something else. So let me know your thoughts. Have you got any other ways that you can reduce your monthly payment on your mortgage? Do like the video, guys. That's really, really important. Do like the video so we get more views on this channel. Do subscribe, hit the bell notification. Check out all the other content that we've got on the channel, including this video right here.